AIA Vitality. Your health is every choice you make. We are part of a global wellness program with over 1.65 million members in AIA across Asia. And in Singapore, we have more than 100,000 members on AIA Vitality. Members live healthier by knowing their health through online health assessments and screenings. They improve their health by logging exercises and enjoying the rewards to keep them going. And indeed, members are making improvements in their health. Even the vitality age gap has narrowed to less than a year. Best of all, you earn points for every activity. The higher your status, the greater the rewards, including up to 15% off insurance premium on selected AIA plans. To keep you going, there is the weekly fitness challenge with personalized targets to help pace and improve your fitness. When you complete the challenge, you get a spin on the Vitality Wheel to earn Vitality Coins, which you can use at the marketplace. That's not all. You also earn AIA Vitality Points for completing these activities. And very soon, you'll be on your way to Platinum status. And we sweeten the deal further with many exciting partner benefits that you can enjoy. With AIA Vitality, nothing gets better than a healthier you. So get onto AIA Vitality today because your health is every choice you make.
A very good afternoon, ladies and gentlemen. Welcome back to AIA Health and Wellness Live 2020, powered by AIA Vitality. My name is Anaran, and I'm your host for this session. Now, I hope everyone's managed to grab some lunch in between our program because we have a really informative session ahead titled financial and protection, keeping your savings intact. Now, I am so privileged to be joined today by two of our esteemed speakers. We have Jamson Chia, Financial Services Director of AIA Singapore. Jamson is a futuristic financial services director with a passion for helping people through life's unforeseen events. He believes that success is realized by placing high value on maximizing individual strengths instead of focusing on improving weaknesses. Now, as a mentor, Jamson is committed to helping his team develop customer-centric expertise by placing value to the customer over efficiency and valuing people over process. Next up is Jennifer Song, Personal Wealth Manager of AIA Singapore. Now, Jennifer is a veteran in the financial services industry with 27 years of professional experience since 1993. She is also a member of the prestigious $1 Million Roundtable, an internationally acclaimed recognition awarded to the top of the financial industry. As someone who values continuous learning, she had earned her Associate Financial Consultant professional title since the year 2000. Her areas of expertise include wealth protection, accumulation, and legacy planning. She is invited today to this Vitality Workshop because of her active lifestyle, which has inspired many to follow her footsteps to balance both wealth and health. A true blue work-life balance ambassador indeed. Now, before I allow our presenters today to begin, I would just like to make a couple of housekeeping reminders. Our speakers today will be welcoming questions from the audience, and if you have any burning questions you would like to ask, please do fire them away in the Q&A section, and we will be able to address them towards the end of this session. And without further ado, I will now pass my time over to our two speakers to share more with you.
Hi everyone, I'm Jennifer Song.
And I'm Jamson here.
Thank you so much for tuning in. Hey Jamson, have you heard about the latest change in the insurance industry?
Are you talking about CareShield?
Yes, they are all right. CareShield Life was newly launched on 1st October 2020 for all Singaporeans and PR aged 30 and above. I guess most of our audience fall within this category. Let me share a little bit with you. Alright, so CareShield Life actually is a long-term care insurance that pays out in the event of severe disability. That means when the person is not being able to perform at least 3 out of 6 daily living activities due to accident and sickness. Now, CareShield Life offers lifetime payout. The monthly payout starts at $600 and increased by 2% yearly from 2020 to 2025. The premium can be fully funded by CPF Medisave. So no cash outlay at all. And best of all, also cover those who already have pre-existing conditions.
Jen, I was wondering, why does the government start this plan as early as 30 years old?
Well, Jamson, you know, this initiative is really a good direction for all of us to follow. They are able to see the long-term big picture whereby many of us are not able to live, take care of ourselves independently in the last few years of our lives. And the impact on our loved one and our nations is very huge. Yeah, so that's why they implemented this scheme as early as 30, which it reiterates the importance of planning early. And this allows us to pay lower annual premium and the coverage start earlier too.
Oh, I see. And Jen, earlier you mentioned that, it pays out from $600 onwards and it has a step up of 2% per year.
Yes.
Is it to fight against inflation?
Yes, that's right. So, Jamson, right now we asked the audience to make a guess. What was the healthcare cost inflation for the past few years? How about that? Let's do a poll, right?
Yeah,
all right.
Let's do that.
Let the poll up. Yeah. Let's see whether you can make a right guess for the healthcare cost inflation for the past few years. All right. So what was the average healthcare cost inflation in Singapore in the last few years? Is it 5%, 8%, or 10%? All right, we are counting down. 10, 9, 8, 7, 6, 5, 4, 3, 2, and 1. Let's look at the result. Yes, most of you are getting it right. Alright, it's between 8 to 10%. Was that what you all expected? Yes. Alright. Yes, 10%. Alright. It means, right, the consequences of not planning early is huge. Not only to the nations, but also to the individuals. Okay, as we already established, right, the healthcare cost is rising at 10% per year, which is much higher than the average inflation and salary increment, right, Jamson? Yeah, it's very high. And it's very difficult for us, right, to save enough to pay for our own and our family medical bill, okay? And relying on the CareShield Life alone, right, is really insufficient. We definitely need other plans to supplement it as well. So one of the main cause of disability is critical illness. Let me show you what are the immediate and future financial impact when critical illness strikes. You know, and as you all know, many of us are very well aware the immediate impact like medical treatment costs, day-to-day expenses. However, we may overlook how it will also compromise our future goals like retirement and child education. At this point in time, actually I would like to share a personal story about my mother. My mother had a stroke 2 years ago at the age of 76. And she passed on last year. She did not buy any insurance when she was young and became uninsurable in the later years due to her health conditions. The medical cost was sizable, amounting $3,000 per month for expenses like physiotherapy, TCM acupuncture, personal caregiver, and other miscellaneous. My mother had 4 children. However, only 2 of us were in the financial positions to fund the cost, and I paid 70% of it. It was really an extremely stressful period for me. Apart from having to shoulder the huge medical bill, I had also to pay for my own family expenses. I'm a working mother of 2 teenagers. Time was scarce. Juggling between work and family was already not easy, let alone having to travel back to Malaysia very often to visit my mother. The most difficult part was not about the time management or being the sandwich generations. It was really the feeling of uncertainty. I don't know how long it was going to last. I wish my mom could get well as soon as possible and live a long life. Yet the financial burden was weighing so heavily on me, and every day that I could not function at my optimal. And I really don't know if any of you had felt this way before, that you could not see any light at the end of the tunnel. And I secretly thought to myself, why am I in these situations? If I could turn back the time, right, what would I have done? And from here that I realized that when one falls sick, it affects everyone in the family. In some cases, the children or the parents have to stop work just to take care of the patients, so that it will affect the caregiver retirement planning and as well as the kids' education funding. You know, from my mom's incidents, I learned the importance of planning it earlier. And this is what exactly I teach my children. I don't wish to burden them, but if one day if I have to fall sick, because dealing with emotion, stress, and physical pain are already bad enough, let alone the financial stress. I don't want my children to go through what exactly I went through. I believe many of you here will understand how it wasn't easy for a sandwich generation. So I urge all of you to plan as soon as possible while your health still permits. Living with dignity is a choice. So planning early gives you that choice. And keeping ourselves healthy is another choice that we can make today. Hey Jamson, by the way, since we are here at the Wellness Talk, right, do you think that health is important?
Definitely. In fact, it is because of our signature vitality program that I took more interest in my own health, and over the years I already lost a lot of weight.
Wow, I can see that. Wow, this is really a transformation journey for you, right? Wow, how heavy were you? Oh no, what was your
about
weight?
100 over kg. Yeah.
Okay, and now?
Now I'm about 80.
Oh, okay.
Yeah.
Wow, that is good. Okay, actually, Jamson, are you aware that Singapore women, right, have the longest lifespan?
Wow. All along we know that women live longer.
Okay.
But how much longer?
Actually, from this statistic it shows, right, Singapore women's average lifespan is 87.55.
Wow.
Yeah, we live longer, and from here also show that Singaporeans have one of the longest lifespan in the world. Well, really, we beat everybody. All right, but by living longer also mean that, right, we have a longer retirement years, right? Yeah. But however, another statistic that is really troubled me is that though that we are living longer, we will spend our last 10 years of our life in poor health.
Oh dear. Okay.
Yeah, in poor health. So that when we we need to factor all these factors, right, when doing our so-called the retirement planning. Jamson, I know that you are kind of an expert in the investment planning and retirement planning. Can you maybe enlighten us a bit more on this area?
Sure, I'm more than happy to do so. In fact, with our latest investment strategy, it has really taken the market by storm. Essentially, with the way how we are doing our investment, especially in today's climate. Before I actually go into that, maybe I ask you, Jen, if you've got $10,000 today, would you save it, spend it, or invest it?
I want to spend and invest.
Spend and invest?
I want to spend at least a little bit.
Yeah, and precisely that's the reason why in today's situation, a lot of people want to invest, but they don't know where to start, they don't know how to start, and more important thing, they are very lost out there in the market. And that is why with AIA Investment Strategy, we have helped a lot of people navigate through this journey, because this picture perfectly depicts what I wanted to share. We might be on a different boat, we might be in a different financial situation, but we are in the same perfect storm together. We are in the same economic situation right now where we're facing COVID-19, we are facing a situation of Donald Trump bringing loads of money, and how is this impacting us? All right, and that is why we are confident in helping you steer your ship towards safe harbor. We are confident in helping you create a better financial future. And how do we actually go about doing it? It is through our investment stewardship, where we primarily use some of these fund managers such as Baillie Gifford, Wellington, and BlackRock. So allow me to run through a little bit of what Baillie Gifford do. They are actually an investment firm that is founded in Edinburgh in 1908, and they're one of the largest and oldest investment firms out there in Europe. And I would say they have done fabulously well for us because they invest in companies that have got a lot of growth potential. They're investing into companies such as Tesla, Netflix, or even Zoom. If you guys can Google a little bit on Baillie Gifford, you'll see the tremendous amount of returns that they've generated over the years, especially investing in all these companies that is up and coming. And at the same time, we have got Wellington, who on the other hand focuses on companies that is of great value. They focus a lot of companies that has got great free cash flow, that's very, very huge in reserves, that's got a huge ability to bounce back when the economic situation goes downwards. And some of these companies includes Starbucks, Merck's, or even our local DBS Bank. And of course, we have got BlackRock, who actually help us with the quant fund as well as the fixed income fund. And what really impressed me about this whole thing is that, with all these fund managers, what they have done for us is that over the last many years, if you look into the investment stewardship, the track record of Baillie Gifford, they have gotten an average return of about 15% since inception. Okay, and for Wellington, on the other hand, for over the last 10 years, they've garnered a returns of average of over 11%. And of course, we also have got the BlackRock, which involves, which uses AI to look into the quant fund. They invest with a return of 12% over the last 10 years. And last but not least, with the BlackRock Fixed Income Fund, which focuses on BBB rated bonds and above, they have garnered a return of about 5.01%. And with that in mind, all right, with all these three key powerhouses behind us, we have done fabulously well over the last many months, especially over the last 6 months. If you look into our track record, over the last 6 months, we have garnered a return of over 35% returns if you were to choose our AIA Investment Elite Fund, the Adventurous Portfolio. If you choose the Balance Fund, it's not doing too bad, it's garnering over 20% returns over the last 6 months. Okay? So, with that in mind, allow me to share with you my personal journey of how I actually plan my own retirement plans. For me, I invest with these fund managers in our AIA Stewardship Fund. And for me, I actually place $525 into pot A and $1,000 into pot B. Okay? And the key thing about pot A is it only requires a commitment of 5 years. And after 5 years, you no longer need to finance it anymore. And that is why I chose $525 into pot A. At the same time, I put $1,000 a month into pot B, primarily because pot B has got a lot of flexibility, and for me, I wanted a little bit more flexibility in how I can adjust my investment strategy along the way. So with that in mind, I actually plan out in such a way whereby I put $525 into pot A that I will finance and invest over the next 5 years, and in pot B, I will invest $1,000 over the next 10 years. At the end of 10 years, total amount that I will put in is about $151,000. And the reason why I decided to temporarily, for the time being, plan till age 51 is because at age 51, 2 of my children will go through tertiary education together. I've got 3 children, one age 12, one age 10, and one age 8. My girl is age 8. In 10 years' time, they'll go through tertiary education together, and that's why I wanted to have an option to decide whether do I want to continue investing at age 51. In case they need a little bit more financial support from me, then I can choose to stop investing in this plan and spend a little bit more resources into their education. But of course, if they don't need my money, they are going to go through local tertiary education, then I will continue to invest. But assuming if I were to just stop at age 51, by the time I hit 66, depending on the returns of the portfolio, I'm able to withdraw a monthly retirement income of between $1,001 to $2,170 till age 76. And then from age 76, I then decide what do I want to do with the money. Do I want to take out the lump sum of ranging between $138,000 to $500,000 depending on the market situation? Or do I want to just take out all the money to enjoy myself, or do I want to let it continuously give me a monthly income? I can then decide at age 76, because if my health is good, I better plan for a longer horizon. But if my health is not that ideal, I might as well just take the money and go out there and enjoy myself. Am I right to say that, Jen?
Yes, definitely.
Yeah.
It's always good to have options, right?
Yeah, that's right.
Yes.
And speaking of options, speaking of the current situation, Jen, I was just wondering, currently out there in the market, how's employees feeling generally?
They're feeling very uncertain, definitely, whether they can keep their job, because in these pandemic situations, so there is a lot of really that fears and concerns to the employees.
Isn't this a very good opportunity for companies to show that they actually do care?
Of course, definitely, if the companies do show care, that it will be good. But how does the company can show care to what extent?
Instead of us second guessing, why not let's do a second poll and ask the audience,
okay.
how would you guys, or rather, what are the important things to show that your employer cares for you? Is it comprehensive health and medical benefits? Is it engagement programs to educate and support your financial planning? Or is it health and wellness programs such as gym membership or health talks, etc.?
Actually, all this also, if I'm the employee, I also want.
Everything?
Yes. Because it's very comprehensive. Yeah.
Let's maybe give the audience a couple more seconds and we can wrap up the poll and see what do you guys think.
Yeah, give us your honest feedback. I mean, like participating in the poll so that we can hear you as an employee.
All right, here are the results. 73% of you actually mentioned that comprehensive health and medical benefits is a good way for the employer to show that they care for you. 11% of you mentioned engagement programs to educate and support your financial planning. And 14% of you mentioned about health and wellness programs such as gym membership. Thank you very much. And this is exactly what AIA has set out to do, because for AIA, we aim to partner you through this entire journey of helping your employees lead a longer, healthier, better life. And how do we actually go about doing it? These are some of our capabilities of what we do. That includes our services in claims management, as well as helping you manage costs through medical concierge, as well as helping you look into, do a deep dive into your medical claims and finding ways to actually manage the costs. And at the same time, through our digital platform, we have actually enabled a lot of HR professionals to bring about this journey in a more efficient manner. And last but not least, through our medical networks, we are able to help provide better services and quality healthcare to your employees. And what is the backbone of this entire employee benefits program is definitely our service commitment. And this is one of the key ingredients, because through our claims, which is I would say one of the key reasons why a lot of companies actually work with us, we have actually helped identify what are the key areas to help the employees improve their overall health and to help them address some of their pressing needs. And at the same time, our AIA Wellness program is really, I would say, impressive. And why do I say so? It's because through our Wellness at Workplace and the AIA Vitality program, we have actually helped a lot of companies improve their overall offerings to their employees. And more importantly, we aim to partner the HR professionals, the companies, to help bring about a better, longer, healthier, better lives for the employees. And how do we actually go about doing that? It is involving 4 stages. It involves the on-site health screening, together with the reviewing of the health screening results. And from there, we actually take on a more targeted approach towards improving the overall health and wellness through health and wellness talks, through events, and more importantly, something that really drives the engagement level is our fitness boot camps. And through all these various events, we have helped improve the overall engagement level in all these companies. And at the same time, earlier on, I mentioned about one of the key factors that contributed to my weight loss is our signature vitality program. Am I right?
Yeah, very impressive, seriously.
Very impressive, right? And honestly speaking, our corporate vitality program has been a game changer in a lot of companies' culture. Why is that so? Because in the past, you know, in normal coffee shop talk, pantry talk, they sometimes may talk about company, they gossip here and there. But after I've introduced the corporate vitality program, things has changed quite a bit. Because nowadays, when you go to the pantry, you hear them talking about how do they keep fit, how do they actually get their points, and some of them even come together to find innovative ways to encourage each other to exercise more. And the benefit of it comes at the end of the year. Why? Because for one of the companies, after almost 18 months on the program, we have seen a 9% improvement in the overall claims ratio and a huge amount of drop in the MC rate. Isn't that amazing?
Well, 9% is very quite high. I mean, drop in the MC rate. Yeah. It's really impressive, seriously.
Correct.
Yeah.
Correct. I agree. And at the same time, what is all this program if you do not have a report at the end of the day to back you up, right? How do you know how have you progressed? How do you know how have you moved from day one till now? And that is why with our Vitality Corporate Health report, we show you with empirical data of how much improvement your company has gone through, and to end off everything, right, with this report, you're also able to share with the management team what you have done and how it has actually helped improve the overall efficiency of the company, right? And that is exactly why a lot of people would like to partner with AIA to help improve the overall benefits in their company. And this is the journey of what a typical company will go through with our AIA Corporate Solutions Specialist. And to us, we always feel that healthcare should not be just dependent on the government, neither should it just depend on the employee. To us, we feel that it is a tripartite between the government, the employee, and the employers. All right? And to end of today's session, Jen has actually shared with us today about CareShield and whether is it enough to depend on it alone. And at the same time, she has shared her personal journey in handling her mom's medical condition. And at the same time, for me, I've shared a little bit more on how the investment climate is and how important it is for us to actually do our investment and how we can actually use investment to help prepare our retirement age, prepare for our retirement age later on. And I've also shared a little bit on the Signature Vitality Program and how we partner our corporate clients in helping their employees lead a longer, healthier, better lives. And today, in case you have forgotten whatever we have shared today, it's okay. But just remember 3 key points: plan it early, plan it right, and plan it well. Because in planning it early, you have a longer horizon and have a choice of to enable you to have choices in life. And at the same time, planning it right is allowing you to have, knowing that the fact that it is never a one-size-fits-all. It is always about constant review and keeping pace with your evolving life stages so that you're up to speed, up to date, no matter where your life stages are. And last but not least, plan it well. Seek professional advice with the right financial tools and plans for you to meet your ever-evolving needs. At the same time, do speak to your trusted advisor, or you can always chat with our AIA consultants in the Engage segment. All right, and with that, I will hand it over back to Emery. Back to you.
Thank you so much, Jamson. Thank you so much, Jennifer. Jennifer, for sharing that personal, amazing story with your mother.
Yeah.
Jamson, for that amazing transformation story that you shared with us as well. For me, the huge takeaway has been how insurance and investment plans can positively impact relationships at home, company culture. It's just amazing to see all this positive impact. Now, I have to thank the audience. We've seen your questions coming in, and thank you for being so engaged and for firing these questions to our esteemed speakers. I think we can just begin. I see one of the main questions we have coming in, and this I can pose to you, Jamson. Is it even wise to be making investments during this period of economic uncertainty?
I agree that in this economic uncertainty, there's a lot of volatility in the market.
Right.
And that's exactly why we need to put our money at work. Because if you look at it, at the way how stimulus are being pumped into the market, at the way how Donald Trump is printing money, in my personal point of view, inflation is bound to set in. And I'm not sure if you all have realized, with such an economic situation, with everybody mentioning, it seems to be like a downturn, but somehow the property prices are slowly creeping up. Just today's newspaper showed that there is a 0.5% increase in the overall property prices, and that to me is inflation. And my personal take is, if you do not take on some risk, you end up taking more risk. And that is also the reason why I kept encouraging a lot of people to place some money into investment, because if you do not start, investing and letting your money work harder for you, inflation will eat you up for lunch.
Absolutely, absolutely. something scary for sure. But we talked about investment and in equally bad times. What are views on insurance during this time of uncertainty as well?
In times of uncertainties, insurance cannot be compromised. Yeah, because illness won't choose which is the best times to strike a person, definitely. And likewise for others, risks like death and total permanent disabilities. So, I mean, we do understand that in times like this, everybody is trying to trim the fats, right? You know, that see whatever, you know, expenses is unnecessary, they want to cut it. But however, before that, you know, they decided to do so, speak to your advisor, because there are still many options that's out there that can still keep your protection needs intact by, you know, maybe looking into reducing the premium. Or another options that would be, you know, like see what kind of plan that it will be fit into that, but of lower premium. Yeah, so my advice is that, because I've been in the business for so long, bad time, good times, things do happen. Yeah, especially we have identified that the medical inflation in Singapore is about 10%. You know, that what kind of instruments, you know, financial instruments that give you 10% of the returns. But if you are not well protected at these so-called the bad times, the impact is very, very huge.
Absolutely, absolutely. And someone like myself who's knocking on the door of 30 years old now and starting my financial journey, I think that's something for everyone here to consider as well. So we're seeing a lot more questions coming in. Again, this is something I can pose to Jamson. Where would you recommend I put my savings if I would like to fully draw out between 5 to 10 years?
If you were to have, it really depends on how much are we talking about. Because at the end of the day, what we really want to ensure is in 5 to 10 years time, when you retire, do you have sufficient to look into your basic needs? Because in retirement planning, we always talk about two key things, paycheck and playcheck. Because when you retire, or maybe let me ask you, do you spend more money on a weekday or a weekend?
Weekend for sure.
A weekend, right? And when you retire, is every day a weekday or a weekend?
It'll be both.
It'll be both?
Yeah.
Primarily, a lot of retirees end up spending up more money during their retirement years. And that's why for me, I always believe in two things. Paycheck that covers your basic necessity, as well as playcheck. So to answer the question, whether where should you place the money, it really depends on what's the quantum that you are having right now and what is the amount that you are looking at to cover your paycheck and playcheck. So to answer that query, maybe I can do a deep dive later on. Please feel free to drop us a question over our email, and we'll be more than happy to address that.
Amazing. Thank you so much for those insights.
Thank you.
Another question that's coming in now. We always hear people advocating buy term and invest the rest. So is this even wise to be doing now, and what are the potential pitfalls if we do that? And I'd like to pose that question to the both of you.
Maybe I'll take that on first.
Sure.
So for us, for me, rather, buying term and investing the rest to me is okay if you know what you're doing and if you're disciplined enough to stay through the course. Because the issue that I see in a lot of people who take on this strategy is after a number of years, they felt that, hey, why should I keep buying term? Because they are not claimed from it. So they decided, let's forget it, let's drop the term. And, you know, God forbid something happens along the way, then they start thinking, how come I suddenly just dropped that term, you know? So for me, the way I look at it is, do you want to rent your insurance or do you want to own the insurance? That's the key difference between buying term and investing the rest versus getting a whole life plan. It's the difference between renting and buying and owning.
I see,
Yeah.
I see.
How about yourself, Jen?
For myself is that I do come across many of my clients, especially the young one, like your age, they will very pro for, you know, buying terms and invest the rest. First thing first, that we will have to identify their needs, right? So if they are just starting out to work and when budget is constrained, okay, term will be a good tool for them. However, as they progress in life, right, when they more established in their career and when they have children, then the next thing they think of is that, that I want to have a coverage that cover for lifetime, all right? Then the term may not able to address to their needs. And when they establish well in their career, they also think that I want to maximize my dollars. I make sure that premiums that I put it in today, right? Then if nothing happens to me, I'm very blessed in life, then I can have something back. We call it cash value. Then the whole life will be more appropriate and addressing to the needs. And when they come to investments, then I always ask them, do you have the superior skill for one, that when you want to do your own investment? Second is that, do you have the interest in want to do your own investment? All right, and then whether you can, sleep soundly, if the market dropped drastically. So if they are really fit into this category, then no issue. But consistency is the key. You have to follow through your investment plan. Yeah. So if they are able to do so, then by all means, there is no right and wrong. It depends on their situations and their needs at that point in time.
It's amazing hearing these insights because it's just giving me so much to think about. So thank you. I see we're having another question coming in now. This is about critical illness. So knowing that these plans are quite common these days, what are the key things that an individual should look out for when buying one? Over to you, Jennifer.
Okay. For critical illness, first and foremost, that there is a guideline from AIA that how much that is enough. Because when they talk about critical illness, the first thing comes to the consumer is that how much is enough, right? I cannot be buying keep on buying. Yeah. So how much is enough if we are talking about the late stage of critical illness, meaning that, for example, cancer is like third stage or fourth stage and above, all right? The AIA guideline is that at least minimally you have to cover 5 times of your annual salary. Yeah, annual salary. If you are talking about the early stage of critical conditions, critical illness, it minimally is about 3 years of your annual salary. So once you identify the amount that is needed for the critical illness, right, then you decide how are you going to do it, whether you want to cover it, some they want to take up a whole life plan, at the end if nothing happened, they can take back some form of money. Or they just want to be purely for protection purpose during this period of time, right, if I strike with critical illness, I have this payout. So those that word of caution is that those that just standalone critical illness, you will have to review it periodically because it does not have any bonus or dividends add on to it. The amount will stay flat, throughout the whole durations. Yeah. And the other thing is that you have to look into that is if I'm ill and what kind of treatments that I'm looking for, and this will give you some clue as in choosing the right type of critical illness plan.
Okay. So, on top of that, I know that a lot of our viewers today are around 20 years old, 30 years old, and they're just starting out on their insurance journeys as well. So on top of that critical illness, what are some of the things that we should look out for in terms of just being adequately insured?
On top of the critical illness, that Aaron, you're very young. Do you know that your potential income by the time that you reach 65?
I do not.
Do you think that is huge figures?
I hope so.
Definitely, right? Because as you progress in your career, definitely there will be fetching a higher salary and things like that. So one of the most important for young people like yourself, there will be the area of disability income, because this will deplete your lifetime saving, if that's right. And if I am become disabled at the age of 30, and supposedly if I'm well and I can work till 65, and I will loss of income of 35 years. And 35 years, don't take the inflations, just talk about 100,000 per year, let's say for example, the figure is very, very huge. Yeah, so that is the importance that when we talk to the young people like yourself, yeah, so this area is really shouldn't be overlooked. And because for young people, death is nothing to them, because yeah, I don't have a family, my parents are well taken care of. Yeah, this will not sink into them, but it's the potential of the potential of earning that income. Yeah.
Thank you so much. I mean, that's just something for me to really think about. We do have time for one last question before we conclude today's session. And we all know that protection plans are generally quite expensive. How can we reduce the premium? And I'd like to pose that question to the both of you, Jamson.
So for me, I always share my clients is that the risk that we face follows a bell curve. It starts to really peak between 40 to 60. At the same time, what really matters is, do you have a baseline of coverage? So get that baseline coverage as early as you can. Because the entry point, when you start early, generally the premiums are significantly lower. And then along the way, as you move along, you can take on term plans to actually supplement what you really need, especially with your liabilities and your exposure going up from age 40 to 60. And one of the key things that I always advocate is our signature vitality program, because with our vitality program, we can also enjoy discount of premiums for some of our plans. And that to my clients have been a useful tool to actually help them manage and reduce their premium. Yeah. How about yourself, Jennifer?
For me, that just now we mentioned about CareShield Life, right? Why the government start CareShield Life as young as 30 years old? It's one of the benefits is to start earlier. Apart from covered earlier, it's also spread the premium terms longer and keep the premium lower. So in other words, that if you start early, then you actually can lock in the premium at a lower price, right? And like what Jamson has mentioned, but this is not the end. That you have to revise it, and then maybe as we progress in life, like I mentioned just now, when you are better off with your finances, and then you think about upgrade it. But upgrade has many options. You can go into the whole life plan. You can go into the term insurance. Yeah. So there are many ways actually to get protected. No one plan fits all, yeah, at different life stages. So speak to your financial advisor, express your needs to them and tell them that what is your concern, so that they can come up with a very comprehensive plans to address to your needs. Yeah, because don't get us wrong that financial advisor come to you, it just want to upsell you the plan, but because every stages your status change, your finances change, and and your needs change. So you have to review periodically so that you stay intact. At least pace the inflations. Yeah, if not, then you realize that your plan will become like not so appropriate. Then you think of like replacing it in later years. So this is our advice to the public. Yeah, don't be shy to speak to us. Yeah, because financial planning, right, is a lifelong journey. Let us partner with you, to walk the journey together with you. Yeah. So
thank you so much. Thank you so much, Jennifer.
Welcome.
Thank you so much, Jamson. I think that most of our viewers have definitely found this session as insightful and as informative as I
Yes.
have. And unfortunately, that's all we have time for today. But if we did not manage to answer your questions, you can head over to the Engage section of our website, where we have live agents who will be able to address those burning questions that you have. So once again, thank you so much to Jamson and Jennifer for sharing so
Thank
much with
you.
us today. And thank you, ladies and gentlemen, for tuning in to today's session. But don't leave us just yet. We have some attractive prizes to be won if you take part in our quiz that is about to be shown on this page at the end of this webinar. Be one of first 5 to submit the correct answers to our quiz, and you'll get to walk away with $20 of Robinson's vouchers. Our next session coming up shortly at 4 p.m. is titled Sleep Deprivation, the Impact on Work and School Performance, and we are privileged to have with us Dr. Liao Leong Chai, Director of Singapore General Hospital Sleep Center, to share more with us on the importance of getting adequate rest. So do stay tuned, ladies and gentlemen, and I will see you back here at 4 p.m. Bye-bye.